We have a panel today to talk about payments and how payments connects and how payments is a catalyst for innovation in fintech. So we have an amazing panel. I'll let them introduce themselves directly. So we have, in a minute, so Mike Massaro from Flywire, we have Bedier from Poynt, Ari Shtilman from Rapyd, and Vaghjiani from Payments. So can you say a few words about yourself to introduce yourself first?
Sure. Mike Massaro, CEO of Flywire. For those that don't know Flywire, a 9-year-old company headquartered in Boston, 10 offices around the world, 450 flymates or employees. And we focus on global payments, but those that are high value, high ticket. We like to say life's most important moments. So tuition, healthcare, travel. That's what Flywire does.
Thanks.
Bedier. I'm the CEO of Poynt. If you don't know Poynt, we are the Android operating system for retail. We take payment terminals and turn them into the computing environment, allowing apps for vertical businesses.
Hi, I'm Vaghjiani. I'm CEO of Payments. We're an end-to-end payments technology company. I guess what we've seen in the market is amazing user experiences, amazing apps on the front end, but what sits behind that hasn't innovated. So we're the first issuer processor to provide you the likes of Visa, MasterCard, and we were offering China Union Pay in Europe. So issuer processor, acquirer processor, back-end technology provider.
Shtilman, the CEO of Rapyd. Rapyd is a company that basically does to fintech what Amazon did to the cloud computing space. So we're a type of an Amazon AWS for the fintech space. It's basically a full-blown platform that operates across 105 countries, that provides everything for collection, disbursement, issuing, and white label versions of wallets. We have around 250 employees across, across the entire world, from Tel Aviv to London to San Francisco, Singapore, Nairobi, Kenya, Sao Paulo, Mexico City, Bangkok, and we're basically trying to redefine the world on fintech and turn it into something more technological and automated.
So thank you very much. You know we have payments expertise in this panel. So I think the first question I'd like to throw at you guys is, why is payments so fundamental to innovation in fintech? I think if you see the first real big unicorn in financial services was PayPal, after all. And from PayPal, we've seen a whole evolution of companies coming through, both as investments of PayPal people or also companies led by PayPal people. So let me throw this question at the panels. Why are payments so important in innovation? And shall we go through an ex-PayPal colleague of mine? So Osama, you want to pick up on that?
Yeah, sure. Changing the game often requires changing consumer behavior. And to change consumer behavior, you need a high-frequency use case, something people do all the time. Payments, the average person globally, regardless of economic stature, does about 700 transactions a year. That's 2 a day. And so this is the runway to change consumer behavior. And by enabling you to do something differently opens the door to just about anything else. Online specifically, there's a special place for it because before the internet was able to make money, before e-commerce was possible, you had to make payments online possible. And so a high-frequency use case that is a habit that you create a new way to do that opens the door to a huge new opportunity. Makes a lot of sense. From there, it became a lot about the data. So you get to know a consumer. Before, right after PayPal, I went to Google. And the reason for that is it turned out that you can tell a lot more about a consumer from their payments data than even their search data. You could lie about what you might want. You could search for a Lamborghini, but if you buy a Lamborghini, it says something else. And so there's a huge relationship between using that use case and now commoditizing. And finally, the age-old internet playbook is find a very prominent use case and commoditize it to the point where you can't make money, to make money on something else. And as you look at all 4 tech platform companies, that's exactly what they're doing, commoditizing a heavily used use case, using the brand halo and the data to get into other businesses.
So frequency, need, and demand is the things that you want to do. So would you agree, Mike? Is that why payments have become so important in fintech?
Well, I think that hits it right out of the park on the consumer side. I think the reality is the banks owned most of the payment processing, right? If you think of a lot of the card acceptance processing, right, their intent was that they were either part of the SWIFT network and how it was built to move money around the world. They spun out a lot of the card processing, right, where WorldPay came from, Elevon, right? Pick your processor, right? It had originations deep in financial services at some point. And so I think one thing that's also happened and why it's such a cornerstone of fintech is that you've seen the value, right? You've seen the consumer demand, you've seen globalization occur, you've seen payment volume just kind of go to astronomical levels, and the infrastructure hasn't been there to support that, right? And so that's why, again, I think it's in the forefront of technology innovation, is that you need companies that can do more than what the banks could do with it and build infrastructure, build software around it to enable kind of global scaling and exponential scaling based on consumer demand. So I think that's part of the reason it's cornerstone of fintech.
So Eric, I want to throw this at you. So the other reason for the importance of payments is that they create infrastructure on where you build fintech on top of. Is that?
Yeah, definitely. I completely agree, because the infrastructure is so bad in this space because it mainly was based on the banks, that things like waiting for money 3 to 7 business days, or doing a very bad experience, you know, when you check out even online and creating a payment, when you're redirected to 50 different pages and you need to fill in information, is something that people cannot live with anymore. People expect to have the same experience everywhere, which is almost seamless, easy. They want things to be immediate. And I think this play opened up a lot of, you know, infrastructure-related capabilities. Companies like PayPal that basically started with it by enabling actually to pay online, and, you know, moved it to other companies like Flywire, like Rapyd and others that basically provide much better infrastructure for consumers or businesses to have a better experience to pay and to get paid.
So, Suresh, so
I think sorry.
Yeah, go ahead.
I think one of the things that really makes you think is how many new players have tried to enter the payment space. So when we talk about payments, and you know, we almost have to separate it from banking, but you know, there is a reason why the likes of, you know, Apple, Samsung, Facebook, they all are throwing their hat into the payments ring. They're not necessarily saying they want to open a new bank, but they all are trying to get involved in the payment scene. So I actually think that when it comes to payments, it's the growth of it and the fact that everybody wants to be involved in the data is defining the growth in the payment space. And the one thing I'll say about PayPal specifically is that PayPal was an early adopter in so many ways, but I actually think that in time, actually, it hasn't evolved, and the lead it had, the opportunity it had, it hasn't capitalized on that. Because when I look at, you know, I almost banned PayPal with some of the traditional banks in the way that they operate now, because they say, this is our model and it works and this is how we're going to progress. Whereas they were in the prime position to challenge some of the, you know, the incumbents to really take on the space in the way that the fintechs are now.
Thanks, that's really interesting. Osama, I think I could throw that at you, but I think I'll spare you the discussion now on that. I think one of the things I want to talk about in payments, whenever people talk about payments, we talk about the banks, and what is opening up the banks is payments, payments APIs, and APIs are happening right now. With Europe, obviously, we have PSD2 that is driving a lot of that push in that direction. Now, what do you think about the future of payment companies if open banking APIs become commonplace, and therefore bank transfers being banks can replace the schemes, for example, and other payment providers? Is that a risk or is that an opportunity? So I'll pick that up if you want.
Well, maybe let me first talk about how I feel about the relationship of regulatory change. I think by the time the government gets it, it's already too late. Necessity is the mother of innovation. I truly believe that, and I think the earliest innovators, earliest adopters figure it out way before the banks do, before the government does, and often the government can be wrong on this. They can, because the pace at which they solve the problem is often way too slow. So I believe in the end, innovation finds a way anyway. And the value is much greater when it's harder. I think the best innovators come out. Now that said, it doesn't mean it's necessarily bad. I think a lot of why China is so successful in fintech the government allowed things that almost everywhere else in the world are scary. That comes at a risk, but it's worked so far. It could just as easily backfire if it goes too far. In Europe, PSD2, I think, is actually a huge step forward. It allows a lot more of that innovation to happen at scale. I think it's actually a pretty decent model for the rest of the world to follow. But it's not enough, because I think what's clear over the last decade or so, just because it's allowed doesn't mean it's easy. Especially in fintech and especially in payments, figuring out how to do APIs, not just that APIs exist, making them super, super simple, hiding all the complexity. It's why Stripe is so successful today. It's why PayPal was so successful. I mean, most people don't understand the single most important thing at PayPal is the fact that you enabled payments by cutting and pasting some HTML. That's all you had to do. In an age where you didn't actually have to be an engineer, just cutting and pasting HTML allowed you to accept payments. And so that ease of use is so important, not just the capability.
You didn't answer the question about APIs, though.
Okay.
So thank you for that really good monologue on regulation, which I think is very helpful. I think what we was asking is, if we force banks or we demand that banks open up their data, we could replace the infrastructure of payments. Do you think that's an issue or not?
I don't think it's an issue.
Because I want to get you.
I don't think it's an issue because, I mean, look at Plaid. Plaid did it by hook or by crook.
Yeah.
And Yodlee before them did it for a decade by hook or by crook, way before government said you have to open it up. So innovation will find a way.
Mike, would you?
I think banks are great at storing money and lending money, right? They have been and will continue to be. It's part of the thing that I think killed some of the crypto traction, right? They couldn't get over this trust element that even some of the legacy banks still intrinsically have, right? It's where most people put most of their money. So I think they have a role, even if APIs make accessibility greater. In my world, I'll tell you, my clients don't want APIs, right? They don't have enough IT and staff to deal with the innovation, right? They don't want to be payment experts. They want someone to take away all the pain, integrate to their back-end systems, accept new payment methods that come up in different countries, right? They don't want to have that burden put on them and their IT staff. And I think that's, I think you will see innovation happen faster if you can get some of those APIs out there. I mean, Uber, Airbnb, they have hundreds of people focused on payments, right? And they could do that because of their scale. But that shouldn't have to be the case, right? And a lot of businesses, a lot of institutions that need to accept payments don't have that ability, right? An API isn't good enough. Just getting access isn't good enough.
So, Mike, you make a really good point. So banks don't like to manage other people's APIs. How about if somebody else helped them with their APIs?
So that actually connects directly to what we heard, right? So at the end of the day, what Rapyd does is actually building these APIs on top of all the companies that don't want to provide the APIs. And when there is an API, even in a bank, it's typically not good enough in order to allow somebody else to use it. And what we see is actually a trend that basically every single big brand in the industry today wants to become a payment method. If it is the Samsungs, the Googles, the Ubers, the Facebooks, the whatever you want, everybody wants to become a payment method. And because they want to become a payment method, they're looking for infrastructure. And when they look for infrastructure, they're looking for APIs that basically will allow them to build their own customer experience when their consumers are doing payments. They don't like what the banks provide. They don't like what the card schemes provide. They want their own experience, and they're looking for APIs that will at least somehow simplify their life, because they cannot build a completely global, payment infrastructure or payment method by doing an integration different in the US versus the UK versus Kenya versus the Philippines versus Singapore. They're looking for something that will somehow flatten the world for them. And a company like Rapyd exactly does that, right? We are trying to flatten the world and show the same API globally for any type of financial transactions. I think that, in the Flywire use case, customers don't look for an API, but when you look at a lot of fintechs, startups, and even the big brands, they need the API because they want to control the consumer behavior. They want to be as simple as possible. The banks do a very bad job. The card schemes probably do even a worse job than the banks, which is amazing. But at the end, the future is push payments. And push payments can only be done when you get directly to the bank account of the consumer, and the consumer can instruct, move my money from X to Y. And that's the critical element to understand. Why Alipay and WeChat are so successful is because of push payments, because they're able to do it. And as long as you're on the card schemes, it's basically a pull payment. You're grabbing the money out of somebody's bank account, and the future is push payments, and push payments require somehow connectivity to the bank account. And I think that the acquisition of Plaid by Visa is a purely defensive play, right, in order to stop this type of things to happen.
Suresh, what do you think?
I actually think there's a journey here. So I'm going to explain what we saw in the market. There was a time a few years back when you just said you have APIs and you were ahead of the game. And kind of working with, having historically worked with like Revoluts and Monzos and Starlings and TransferWise, the likes of these, and actually seeing how they use the APIs. What I've actually found now is that initially it was having APIs was a win. Then it was, how many APIs do you have? If I can give them an encyclopedia of APIs, initially it was thinking, oh, this is great, we can do so much with it. What we're finding now is actually people want efficiency. So people actually, this is going to sound really strange, but what we see is people want less APIs with more functionality. So it's almost a combination of a single API that could combine a number of other APIs, but from the end, or the end customer perspective, it's one API. So it's almost API efficiency. I think there's a danger of death by API as well. So I think what we see is that. Regarding the open banking, I think it's interesting that the card schemes have acquired a number of companies in that space, and recently there was the discussion about Plaid. So I think the card schemes are seeing this as a defensive play in order for them to protect the revenue streams they have. I think that the real user cases for open banking we haven't seen yet. I mean, there are so many people, probably all of us in this room, that have apps where you can actually, integrate other bank data into it. And people aren't using it because they don't see the real value in it. So I think there won't be good adoption of this until we see real benefits for end customers and real user experience. Otherwise, why use it? And to your point, I totally agree that sometimes regulators think it sounds great on paper, and then it goes out, and it doesn't happen. And we could talk about endless things that they've done to affect the industry.
An interesting client for data, of this kind of data, is actually big tech. So they have really good use for data. They will sell you a cost per action instead of a cost per click, or they sell you better ads when you browse through a social platform. Now, what about them? They're coming in very aggressively into the financial services space. Their way in is open banking APIs. Their first product will be probably a payments product. Are we now finding ourselves having opened up a safe or secure environment, which is the financial service environment, to these other players that are coming in, not necessarily to provide a financial product, but to gather data and maybe give the financial product for free just to get the data? And Osama, you had some thoughts on this earlier, I think.
Yeah, absolutely, it opens the door. The interesting thing, though, is that big tech is also becoming as slow as, they're becoming the incumbent. And over time, they will slow down, just like all the incumbents now. And so while the opportunity exists, moving fast against it is less likely. They will try, they will succeed at some level, but I think the opportunity is still in the garage somewhere, where a bunch of people will figure out what the APIs provide and what the APIs don't provide that makes them unique. Because that uniqueness is what's important for staying power. If anybody else can replicate what you have in 3 months, you don't have anything. And so it's really important that you have something unique that nobody else has, and that means creating, in addition to what's available, creating something new. And then to just a couple of quick points on the, I don't necessarily agree that the future is push payments. I actually believe we're going towards more and more convenience, and convenience means no action at all. And that means I had to pre-approve behavior and then allow machine learning or some kind of automation to take over for me, which goes back to the point of too many APIs and too many API providers are always a bad recipe. So there will be a shakeout. After all this innovation and all this ideation and all this availability of things, there will be a shakeout, and there will be 1 or 2 players, because if you look at the history of platforms, you need that level of scale for universal success.
I really like that comment that big tech is the new incumbent. I think that's definitely a quotable quote there. Interestingly, you talked about some of the other trends that we talk about are not actually being discussed here. So one of them is the whole IoT discussion. So when more and more devices are going to be connected to the net and therefore could become agents of payments, they will come in, they will have to be then integrated with a proposition that is actually making sense. And then when you overlay on top of that artificial intelligence and therefore authenticating, or identifying, accepting payments, you're opening up a completely new environment that potentially is the next big frontier for us to pass. And as you said, very few people see big tech able to play in that space. Mike, what do you think about that?
Well, I do look at the battle between push and pull. I think it's probably too simple to say like it's going one way or another. I mean, I'm the father of 4 kids. I'll tell you right now, nobody should be debiting anything out of my account based on my kids and the phones and the things that they try and download. So, I think at different parts in your life and different transaction types, you need different behaviors, right? I want to have authorization over certain transaction types. And I think that has to adapt to the model or to the industry or to the segment or to the use case. And I do think that's really important. And I think that applies to IoT, right? Depending on what it is and the damage, quote unquote, it could do, if I'm downloading something that's, on my refrigerator or something that allows me to have new functionality in my automation at home, right? Hey, that may not be a big deal. If that thing is controlling, maybe my vacation house or something, or it's something that's critical function to, home, I want to make sure that thing is kind of bulletproof or has the ability to notify or to do a transaction if it needs to. So I think it depends on that use case. And I think up here, I think the beauty of payments in general is through consumerization, through the increase of cloud and the ability for companies to move faster in tech, and through globalization, there's enough growth to make so many areas, so many businesses, increase around this space. But I do think when it comes to IoT, you've got to figure out who's going to own that wallet, who's going to own your credentials, because you don't want to go and have to have your credentials scattered across all these different players.
So Eric, who's going to own the credentials in an IoT environment?
The big brands at the end of the day, right? The big brands will become the new Visa, MasterCards of the world. They are going to become the payment method, because at the end of the day, what we see, especially when you look at Asia Pacific, you can see that how the brands are taking over as the payments. And I think that in reality, the new generation is willing more to trust them and to give them data, even if it is credentials. I think specifically in this IoT play, it's really per use case, like Mike mentions, because getting in a situation that you can pay at the store with an IoT device really depends also on the hardware that exists and the point of sale that is able to accept it. So it's super challenging, but overall, if somebody has really a chance to take over these credentials and become a type of a payment instrument on an IoT, it will be the big brands that actually manufacture the devices.
So what do you think about that? Because there doesn't seem to be a big, clear winner on the IoT space and what new propositions are coming out, but we know the capability is there. So what do you think is happening, Suresh? What do you think?
I think that when it comes to IoT, in combination with something like AI or machine learning, it can give it a whole different dimension. I'll give you an example. I have car insurance, and every time the car insurance runs out, I have some insurances that renew by themselves and some that don't. And as much as it's a convenience thing, I actually find it quite frustrating because I don't actually know if I've got the right deal. If anything's changed, I don't know, my fridge is telling me I've run out of milk, but I'm actually going on holiday next week. So I'm actually saying that as a single IoT, black and white, I don't think it's had the success it should have had yet. But with new technologies, I think it could be a game changer.
Very interestingly, one of the things that IoT opens up is an additional access point to your finances through devices that are divided all over the place. One of the things that fear that is always pushed by Luddites and anti-innovation individuals is cyber risk and how we're opening up our homes to the ability of our fridge being hacked and our bank account, or losing my pension because my fridge got hacked. So what are your thoughts about the cybersecurity, and what is it that we can do about, what are the options that technology has to protect us from the fact that we are now creating all these access points to our money? And Mike, do you want to?
Well, I mean, I think it's the biggest thing the card schemes use, right, is the whole protection element. And I think there's things we collectively as an industry can do better. I think you've got to look and say there has to be a dispute mechanism, right? If money leaves an account, right? I mean, that's why people look to card schemes. That's why people look to banks in those extreme instances. And those things get held up as the reason why, you know, you can't have any innovation without either a bank involved or without a card scheme involved. And I think, you know, aligning around cyber and having better industry sharing policies around it to share threats, to provide some frameworks for dispute. I think governments and regulators can actually, you know, help a lot in that regard to put in kind of some of those models that allow people to feel like, hey, if I use something and something goes wrong, at least I have a recourse to it. Because I don't think that ultimately I think is what's going to keep consumers tied into one of those brands, right? You're not going to get truly revolutionary disruption unless you provide a mechanism that provides protection, or you're going to get small transactions, right? And I think we talked about it a little bit backstage with even some of the challenger banks. You know, you don't see huge wallets yet there, right? Why don't you see people moving, you know, $100,000 in net worth into a challenger bank, right? That's not what people are talking about, because I think there's a level of concern or trust that hasn't been crossed over yet. And I think the same is true with payments.
So what do you think?
Yeah, I mean, look, this has always been about a combination of convenience and trust. And trust is really, really, really hard to earn and very easy to lose. If you look at it, back to the identity question, you know, we used to think of identity, especially online, as access or information sharing. And Facebook did an amazing job at that. You know, look at all the apps that allow you to log in with Facebook. But very few Facebook users trust that identity for financial means. And it's been attempted multiple times by Facebook to try to do this, and they've struggled with it significantly. Consumers keep telling them, I trust you with my social data, especially if I'm a millennial, but I don't trust you to log into my bank. And it's not because banks don't want it, it's because consumers don't want it. And so the other really important example is 20 years ago now, Microsoft tried Passport. We talked about this backstage. They tried Passport. It was the identity. And if you look at its brands, Microsoft 20 years ago was the biggest tech brand of all. And they had every right to say, hey, we're going to be able to do this for you, do it everywhere for you. And consumers just did not want to do it. And so this idea of somebody who earns your trust, but not just the convenience of today, which is let me log in faster or pay faster, but let me give you complete control, or at least to some level, to do all transactions under $100. That is the future. That is what will happen. And I don't know that anyone yet has figured out, even the big brands, how to do that well.
Let me try an experiment here. How many of you in the audience would be happy for Facebook to access your bank account to give you some information? Please raise your hands if you like Facebook to access your bank account.
Raise your hand. Raise your hand. No.
Okay, how many of you would give access to Facebook if you got a mortgage at 3% cheaper than what you currently have? Raise your hand in that case. There you go. So I guess it's all in the utility. And what is the service that is provided? So we keep on thinking about the generic, should I get Facebook access? The answer, absolutely not. But if I get value from it, maybe I will do. What do you think of that, Suresh?
I think trust is key, fundamental, but the one thing I was going to say, it may sound a bit harsh, but everybody in this room, including myself, we do not represent the future. So when you look at your children, when you look at their attitude to risk and the way that they do things, it's very different to how we do things. So I'm not questioning whether the security needs to be there, but I'm actually saying that the next generation's attitude towards risk is very different to us.
Do you agree with that, Eric?
Yes, but I also agree that if you ask people 10 years ago, you go back in a time machine, and how many people are willing to give a mobile app that they never used, their card details, to store it on file and reuse it, right? Nobody would have done that 10, 15 years ago. It's like, it seems crazy. And today, it's super normal. People constantly do it because you have a PCI-compliant logo. Oh, sure, yeah, I will give them the card details. They will store it for me. So I think things change. I think that what happens is that basically the brands are bringing everybody back to the days that you use the credit card in order to get enough points to buy a microwave. So suddenly you say, oh, sure, I will pay with an Uber because they will give me rides, or I will pay with an Amazon because I will get a 10% discount when I shop on Amazon. This buys trust of the younger generation that doesn't really understand what does it mean risk, because nobody stole their card details, or even when somebody stole, they got the money back immediately. So the world is changing, the way things are changing, but some things still look like 20 years ago, but with a different brand. So instead of getting a microwave from your credit card company, you will get funds to use an Uber ride or to buy on Amazon.
So you raised a really interesting point, which is customer attitude towards innovation and the ability to accept that. Now, we talked about Facebook, and we have our views about what they do. But what if somebody, one of these social platforms, came to you and said, I'm offering you a means of paying anybody in the world instantly, very fast, with a very established value, and all you have to do is through your phone? Would you? And it's going to be a cryptocurrency that it doesn't have any regulation from any of the government bodies, so it's going to be entirely driven by the value of this currency. Would you want to work with a proposition like that?
Well, I mean, Apple and Google are probably the closest to doing it, right? I mean, they have stored value components, and with a
cryptocurrency, I was thinking.
Sure, but I mean, whatever the mechanism is, there's still some type of ledger behind it that they're holding balance in credit and debits, right? So I'd look and say someone you have to trust has to hold the keys to that crypto, right? And I think that's the reason that crypto momentum failed from a payments perspective prior, is that there isn't that trust to allow some algorithm in the cloud to manage the flow of debits and credits. It has to have some brand behind it, I think. And I think the closest to are, you know, and kind of ironically, the consolidation of everything on the mobile may be the choke point, right? And again, I think you still have two different kingdoms between Apple and Google in that world, but I mean, it's the closest to it.
So there's a third player that actually is trying to play in that space, right? So Libra, do you want to talk more about that? What do you think about it? Is that Libra does have any legs in this case?
It's hard to say. I think Libra in its current form is challenged, and it's not a small challenge, and so it will have to change to be successful. But backing up a little bit, I think we're in the second phase of crypto. The first phase was the sexy, look how amazing it is, look at the hype, it's going to replace all currency in the world. The second phase we're in now is the utility is really awesome and the technology is great. Why can't everybody adopt it and do other interesting things with it? And I think there's a third chapter that's going to come sooner or later, and it has to be government-led. Governments will not leave control of money openly to others, and they, if governments want to do one thing and one thing only, it's to control money. They have to do that, otherwise they can't govern. And so I think government crypto is coming. The interesting part is it's a lot harder for every government to have a global crypto scheme. So a few will emerge as global. China is trying to lead the way now and probably the first to go big with it, but I think there will be a few others, and that shakeout will be interesting because it will reshape how commerce is done globally.
So we have corporate crypto and we have government crypto. The government of Iran has issued the e-rial, which is a cryptocurrency that they use for international transactions. So where do you think it's going to go?
I'm going to predict that's going to be challenged a little bit.
I think as an industry, we tend to have a habit that one thing fits all, and when crypto first came out, everybody was like, this is it, this is the future in every aspect, whether you're buying a packet of crisps or whether you're sending money overseas. And it's a bit like, you use your credit card when you want to buy something over the counter. You don't use your credit card usually if you're transferring money overseas. So there's almost been this kind of approach that it's the one pill for every solution. Even open banking APIs, it doesn't have some of the protections that you need when you buy things and there's a chargeback, as example. So I think that there is always a habit that it's the one solution for all. And I think that in certain things, such as remittance, such as, transferring of money, perhaps larger amounts where you need to send them overseas, it's about speed, it's about efficiency. It could actually be a really, really good solution. I do think that the key to the currencies is stable coins. I think that the volatility you have in crypto right now is a detriment to what it represents. So I'm not a fan of it, but I'm not in a disagreement with it because I think it's laid the foundations for where we will go.
Eric, what do you think about crypto?
I think that crypto, as the word crypto already has bad enough reputation, so it's not going to be used as crypto until somebody will rename it into something else. But I think that in reality, the regulators are never going to give up, the control of the money and the value of the money. I think that there will be digital money ways of, digital money in countries like China and others, but it's not going to be crypto as I have my own ledger on the phone, nobody knows where it is, I store my own values. Money is still going to be kept with banks. This is the way the world works. Banks are like the routers in the internet world, right? You cannot operate the internet without somebody sending the traffic somewhere and hitting your server and your infrastructure, and I think that the banks will be there, but they're a type of a router that they move the money, and if the money is actual SWIFT/physical money, or is it a digital way of paying, that will be the new crypto. But I think crypto as crypto is the new gold, right? It's a type of a commodity. People can invest in it if they believe in it, but it's not really the payment or something that can be used as a real, differentiator.
So I think one of the aspects that you said that crypto is not so succeed is the fact that it will not have government support. I think what's really interesting is obviously customer benefit and welfare on that aspect of it. So I think one thing that generates customer support and customer belief is regulation and belief that you are protected. And for example, one of the facts that the US fintech usage by consumers is not very high is attributed to the fact that the regulator in the US is not as proactive, is as visible as the European regulator. What are your thoughts about regulation, and is that a force for good or force for bad? And Suresh, why don't you talk about what do you think about is the role of regulation and how can it be channeled?
I think to the point earlier where we talked about regulation is always playing catch up. As a sector, we're moving so quickly that it is always a case of protecting the end customer. And I think what's interesting is different governments around the world have different approaches. Whereas generally, Europe, in the UK, it's been these are the guidelines that we want you to operate in, and how you operate within them, there's an element of flexibility. And in other regions, it's been far more rigid. I think one of the success stories, particularly in the UK, has been the regulatory sandbox, the fact that the FCA have actually championed this. And it's interesting where you see adoption in Mexico, Singapore, Hong Kong, where they're trying to replicate this. So I do think there are some really good learnings, but I'm going to give you another simple example. Let's just look at the EU, and it's probably coming from England talking about that. It's a very limited conversation I can have right now. But the fact is that every country implements it in a different way. So even within Europe, there's so many variations, and you go across different regions, and the way it's implemented, if it's really controlled and restricted, it's destined to fail. And that's just my view in the way the technology has been managed to date.
So, Osama, you come back from an environment that has 50 state regulators and 8 federal ones, and both of you, Mike, also in that space. Is that a better environment for trust in payments and so on, or not? So what are your thoughts?
Why don't you go first?
No. All I was going to say was just PSD2. I mean, it's a great example. We keep saying it, but there are tiers. So as you are smaller, you have more flexibility. As you impact fewer consumers, you have some ways to innovate and figure out the world, right? Like that is the way it should work. It shouldn't be a binary, because again, it just empowers, right? I mean, Mark Zuckerberg made the famous comment in front of the US Senate where he said, hey, we're the big players and we can afford all the lawyers and all the regulatory protections. It's the small, innovative players that need to have some flexibility for the regulator. So the US is not the example of regulatory purists.
Yeah, I completely agree, but maybe let me explain a little bit more of the view there. I think innovation and regulation are almost always opposite ends. Innovation requires trial and error. You have to make mistakes to figure out a better way to do things. Regulation is hard to undo. It's really hard to undo. There are always really bad consequences when you get it wrong and then try to pull it back. And as a result, if regulation tries to get ahead and pave the way, it almost always fails because it doesn't know what the right answer is and tries to still stick it. But when regulation, after the answer's been figured out, is used to scale it and normalize it, it actually almost always works well, and net neutrality is a great example of that. But there's always a good time and a bad time for things, and it can always be overdone. And as a result, you always have to revisit that regulation and figure out what is the new normal and how to help scale. But it's really bad when you try to pave the way and say, go there.
Okay, thank you very much. So regulation can be good if it comes after innovation. We're now almost out of time. I'd like you guys to tell me what is the most exciting thing you're seeing in payments right now, and we start with you, Eric.
So what we see is basically the merge of the platforms, where you see a lot of consolidation in the space. People don't want to integrate to different companies in order to build solutions. They're trying to find platforms. It's a little bit like the cloud computing space 15 years ago, when cloud computing used to be, I will put my server in somebody else's data center.
Did I say briefly?
Yeah.
Yes. Okay.
So basically the merging of the platforms and the single platform connectivity.
Thank you. Suresh?
I think we're now seeing I wouldn't say innovation, but I would say modernization of the back end. So the non-sexy part of payments, where all the cobwebs are, where you don't want to show anybody, we are seeing real rebuilds, and they're not, let's modernize it. It's actually, let's look at the architecture and build it new from scratch based on all of our learnings. And I think it will revolutionize what we'll be able to do with data. And one of the things people shouldn't underestimate is what 5G will bring.
Thanks. Osama?
The fusion of three gigantic multi-trillion-dollar industries into something new that's not recognizable, so commerce, advertising, and payments, are coming together as an experience to disrupt almost every other industry. So the discovery process and the buying process with payments not really clear where it fits in the future, or it's almost always a good experience, and Uber is a good example of that.
Thank you, Mike.
For me, it's globalization, just making it local methods just available everywhere in the world, right? There's going to be more globalization, more people traveling, and that's going to grow exponentially, and I think payments is going to have a ton of innovation related to that.
Thank you very much. Please join me in thanking a fantastic panel.